Joining me right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning, Fox Business's Dagan McDowell and Forbes Media Chairman and former presidential candidate Steve Forbes. Great to see everybody this morning. Thank you so much for being here. Dominick, kicking things off with you. What do you make of all this volatility?
Well, I hate to say it because it drives clients nuts, but it's normal. We had this real scare with this new variant coming in and potentially could be a very negative global event. And then we had Chairman Powell really indicate that maybe inflation isn't as transitory as he's been indicating. That put the fear of God in the market. We saw a 5% pullback in the S&P, a little bit more in the NASDAQ and the Dow. As that noise has softened a little bit, markets recovered. So this is quite normal. Clients don't like it, but it does happen.
We've got a lot of the major strategists coming out with their 2022 outlooks now, Dominick. How are you looking at the year ahead in terms of investing? What is your outlook for stocks?
I think, Maria, the answer has to be quality, quality, quality. Strong balance sheet companies that have good earnings, and I think most important, companies that have the potential to pass on costs that are obviously very high, input costs, and can they pass those costs on to their consumers? If they can't, they're in trouble. And you named some companies this morning. We see Kathy was ARK, an ETF investment. These more speculative growth companies, they're in trouble. I think you stay away from those. Create a really good, solid, core, quality portfolio for 2022.
Yeah, there are some unanswered questions that we are all watching as investors, whether it be the inflationary story, also the supply chain disruptions. How do you think these things play out? Are we going to have to just figure out how to live with all of this uncertainty? The Federal Reserve, also a big unknown. When will they start to taper? And will we see 2 or 3 rate hikes in the new year?
To the first part of your question, the comment I use with my own clients is we're all learning to eat with our left hand when we're used to eating with our right. Companies are figuring it out on the go. The ones that do it well are going to prosper. The ones that can't figure it out, they're going to go by the wayside. So going forward, that's the key here, to look for companies that can figure out how to deal with supply chain problems, which are not going away. They will resolve themselves, but as I've been saying all year long, Maria, this is not something that gets fixed in a day, 3, 6, 12 months out as this pipeline unclogs. Companies that figure out how to fix that problem will prosper. To the other questions, volatility. Inflation is here. Inflation is not going to go away anytime soon. It will crest sometime next year. But when you look at labor costs and inflation there, energy cost inflation, and the supply chain problem that you just brought up, Maria, we don't see inflation really ebbing till mid-year next year.
Steve Forbes, jump in here.
Dominick, in terms of volatility, how long can this overvalued market stay overvalued? You emphasize the importance of having good stocks next year, but by every measure, this market is overvalued. Inflation is going to be with us, which eventually means we're going to have higher interest rates. That can't be good for stocks. How long can this levitation continue?
Look, I love the question, but the problem we have is, what is the alternative? If we look at cash, liquid resources and bank accounts and money market accounts, we are literally talking about trillions of dollars. And even if the Federal Reserve decides to start raising interest rates, money market rates are not going to go up to 5%. You're not going to get a reasonable rate of return sitting in a money market account or a bank account. So investors are desperately looking for places to put their capital to work. Obviously, the markets have done well over the last couple of years. I think for the new investor, you have to be really careful. That's why I keep stressing quality, quality, quality. Those companies may not be as overvalued as some of these speculative plays. You have to be ultra careful going forward. And there's going to be a lot of volatility. The noise coming out of the Fed seems like it changes almost every single week. That noise is going to move the markets.
All right, Dominick, great analysis as always. Good to catch up with you. Thanks so much. Dominick Tavella joining us this morning.